Hey everyone, in this short video I'm going to highlight some of the huge positive outperformances in UiPath's most recent quarter that had everyone talking about UiPath stocks. So let's get right into the details, starting with the CFO of UiPath, who said, "We continue to execute against our strategic imperatives with balanced growth and profitability, which resulted in first quarter revenue outperformance as well as record operating profit margin and adjusted free cash flow. As a result, we're meaningfully increasing both our full year operating income and adjusted free cash flow outlook for the year." So really good results for UiPath in its most recent quarter. So good, in fact, that management had to raise the targets for the rest of the year because they're so ahead of schedule that they had no choice but to increase the outlook for the year. Now, this comes on the back of some investor concerns about how the company would adjust to the rise of effectiveness in artificial intelligence. It's now becoming more clear that UiPath is going to be a beneficiary from that trend. Initially, it was thought that maybe it could suffer from the rise of artificial intelligence, removing the need for some of UiPath's services. That's not looking like it's going to be the case. It looks like artificial intelligence is going to support the growth of UiPath, making it more valuable instead of less valuable. Additionally, in the quarter, the company's net retention rate was 122%. That's also very good news. A net retention rate above 100% means that existing customers are spending more with UiPath stock this year than they were last year. And that's a really good sign because it shows that UiPath is delivering excellent return on investment. So if you're a client with UiPath and you're increasing spending with UiPath, that probably means that you're getting great value from UiPath. And that's a great indicator for UiPath's future. Because if you're delivering good value to your customers are just going to keep raising their spending with you because you're bringing them more money, right? If I spend $100 with you and you give me $200 in value, I'm just going to keep spending more and more with you because you're giving me such good value for my money. I'm going to keep coming back to you because there's relatively few places that a business can take their money and get an above 100% return on investment or above 1-for-1 return on investment. So if you're delivering a company solid return on investment, they're going to keep coming back to you, and that's good news. Remaining performance obligations increased to 904 million, which was up 34% year over year. Remaining performance obligations are contracts that UiPath has signed with clients that they plan to execute over the next 12, 24, 36, 48 months, or even longer. So these are long-term contracts that customers sign with UiPath, and UiPath cannot record that as revenue until it performs that obligation. And so that's an interesting outlook into UiPath's future revenue forecast. By looking at its remaining performance obligations, you can see, hey, their revenue outlook looks pretty good. So UiPath says that we have built a strong foundation to scale the company and will continue to leverage automation and improve operational excellence to grow the business efficiently. So that is what they demonstrated in the most recent quarter. They increased their revenue and they increased their adjusted profit margins and cash flow even more than they increased their revenue. And they said that these positive trends are likely to persist for the rest of the year. So the good things investors saw from UiPath in the first quarter, they're going to persist in the second, third, and fourth quarter is what management is telling us. So that's really good news for UiPath and UiPath stock investors. It's no surprise why everyone is talking about UiPath stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.